Well, top of the list has to be the global economic health because as global economy grows, so does demand for commodities and the commodities that we produce and sell and we trade. So that's going to be it. So that means the gross domestic product of the major economies of the world. The Black Sea region is the largest exporter of commodities. China is the largest importer of commodities. So those regions are certainly key. The war has been an interrupter of the Black Sea that hopefully will be coming to a more peaceful resolution here soon. And we'll have a flow of commodities once again, but certainly the health of the world economy is a factor, and China a big part of that since they're a big consumer of commodities. Number two, I would have to say that we're watching what the currency rates are. And right now, the dollar is very strong, and that's creating a lot of headwinds for U.S. commodities trading elsewhere. It's encouraging countries to look for alternative sources of commodities where their currencies aren't as strong. They don't have to accumulate as many units of the currencies at the expense of their own in order to make the purchases. So that is a big factor. Number three is really the geopolitical factor of the economy and how that influences trade routes, how that influences people doing business with each other. Prior to the war in the Black Sea, we drew our trade routes based on who could get what they needed the cheapest to where it was needed. Now it's who among my friends can provide me what I want at the lowest cost. And so it's lengthening trade routes. We have risks to some trade routes. It's making trade more expensive, freight costs more expensive. Well, some of that depends on which commodities you're looking at. If you're looking at those who are produced in agriculture that are grown as crops, then a weather huge factor in production. And you have global weather trends that will influence the production of those commodities, whether they be big crops, and sometimes we have back-to-back years of big crops that depress prices, and other times we have back-to-back years of poor production weather in the major producing areas of the world that support prices. Then the other thing is, what about those commodities that are mined from the earth? That's going to be more related to currency. That's going to be more related to geopolitical tensions and other factors that may influence it. But the final thing that would go into that then would be demand, and so consumption and what's influencing consumption, whether it be the health of the economies or geopolitical factors. Well, here in the States, I like to use the baseball analogy, and we have periods of times where we go through cycles where prices are good and the producers of commodities can go for the home run, so to speak, and try to pick the top third of the market and maybe even do better than that and follow the seasonals and the trade policies and trade patterns and try to pick the highs because they can afford to risk it, because even during the low times, they can fairly well be assured that they're going to break even or better, and generally going to be growing equity in their operations, whatever those operations be it the agricultural or industrial. But then we go through cycles where you have to be more defensive in your marketing and focus heavily on the risk management side of it. And that's to protect the equity that you built during the good times in your operation. And you need to be focused on margins very heavily. And whenever the prices of those commodities allow you to lock in a margin of break even or better, take advantage of that and be less concerned about hitting doubles or triples or home runs, and just make sure you're still in operation a year from now or 2 years from now by managing your risk exposure. Long-term weather patterns certainly give us the big picture of what we can anticipate, and that's generally looked at as the ENSO cycle, La Nina or El Nino, which is the sea surface temperatures relative to normal in the equatorial Pacific. That has a big, that doesn't have the big influence on the weather patterns, but that is more reflective of changes that we're seeing in the atmosphere. When the sea surface temperatures change, it usually means that we're changing trade winds. They're going in a different direction. They're picking up speed or they're calming down. And it's those atmospheric winds and the change in those cycles that have a big influence on our weather patterns overall. So we know in La Nina weather patterns, we tend to have higher risk in the North American growing season. We tend to have some higher risks in South American growing season. And things like that affect it. It also even extends to differences in weather patterns even into Europe across the Atlantic. So ENSO cycle is a big one overall in measuring the impact that it has on those sea surface temperatures and what we can watch there. But the main thing is when it comes down to the shorter term patterns, the little nuances in the forecasts are what's really important. And for that, it really takes the local weather service, whether that to be a local service here in the United States or in Brazil or in China, indicating, because you can have an overall dry pattern. For example, in Brazil, normal rainfall might be 8 to 10 inches per month. And in a dry pattern, you may get 50% of normal rainfall. But what is the distribution of that? If the distribution is good, you get even distribution and good timeliness, you can still grow a bumper crop. And so then you start really relying on those local forecasts. Right now, it's the U.S. election and the election of Donald Trump as president of the United States and his diplomacy over the social media, so to speak, and making tariff threats from various countries as a negotiating tool to get the actions out of them that he wants. Those headlines can happen in the weekend, they can happen during business hours or overnight. And so when you have political leaders who wield the power of the economic power of their country, be it an exporter or importing nation, then they can greatly influence global trade. And we're certainly seeing that play out following the latest US election. And so what we find ourselves doing is spending a little less time focusing on the weather forecasts for production of agricultural commodities and the GDP of various countries, and more time focused on social media accounts of President Trump and whether he's threatening sanctions, whether he's threatening tariffs, and the response of the country that is being threatened. Yeah, it has a significant impact, and interest rates are a major factor of that as far as stimulus for the economy. When a central bank, and particularly in the central banks, talk to each other, and they tend to try to coordinate with each other, and when they're in a heavy stimulus mode, that is generally seen as inflationary for the commodities, because that's going to inflate growth in their economies is the objective that they're reaching for, increasing demand for commodities as their economies grow. On the other hand, when they become restrictive and they want to bring down inflation or reduce inflation pressures, they're raising interest rates, then that tends to increase the risk that you have recession or decreased demand for commodities. And so we've certainly seen that cycle, especially after the pandemic, when they did a tremendous amount of stimulus combined with fiscal stimulus from their central governments as well. And so demand for commodities jumped both in consumption as well as simply managed money wanting to own commodities as a hedge against inflation. So the market managed supply and demand at higher price levels. And then when the restrictive policies started and interest rates started rising, then the managed money wanted to be short the commodities or sell the commodities because they no longer needed them to manage to balance out their portfolio. And they anticipated decreased demand for commodities as central bank policy slowed down the various major economies of the world. So it has a major macroeconomic background to our supply and demand tables. Well, I think artificial intelligence is certainly at the top of that list. We certainly use it for our analysis, but I think one of the biggest impacts is the market prediction factors, or the major trading companies, particularly the managed funds, are using it to try to anticipate market movements. And so they're using AI to try to forecast those factors that are going to move the markets, and how much, how long, by what scope, when. And so that's increasing the speed at which we process information. By we, I mean the markets process information, the speed at which the markets trade information, and so it's therefore increasing the volatility in the marketplace. And so I think AI is probably at the top of the list of the impact on the markets and how those dynamics are changing. Well, I would see the greatest opportunities for export contraction right now being in China for the agricultural commodities, probably less so contraction for the industrial commodities. I think their economic growth, once they're able to turn around their economy, still has a tremendous amount of potential to grow there. But they're becoming more self-sufficient in commodity production from the agricultural standpoint, and they are diversifying where they get that from. When we talk about production, I think South America has a tremendous amount of production potential. Brazil, in particular, has vast territory that they can expand production into that without touching the rainforest. Eventually, I think India will be a much larger market, just as China was during the 90s and the early 2000s. I think that India will be the next frontier of demand. I think Africa will be following that as another frontier of demand growth. I think over the next few years in particular, we're going to see a reshaping of the global trade that really started during the pandemic and then during the Black Sea War. As countries redraw their alignments, they start to build up reserves a little bit more, operating less on a just-in-time inventory of the various commodities that they utilize. Develop relationships. I think one of the key developments is going to be whether China and the BRICS nations are successful in developing their own currency and banking system to compete with the dollar as being the global central currency or not. Kind of the reshaping of those trading relationships between the East and the West that seems to be creating the tensions right now that we see developing around the world as various countries pick their sides. Yeah, I think you have to look at short term within the context of long term. So I think it's very helpful to understand the macroeconomic shifts that we're seeing occurring around the world as far as trading partners, geopolitical strengths, where the growing economies are, the changing trade partners that we're seeing. And then within that, look at the local aspects in the short-term dynamics. The short-term dynamics on the food-based commodities is going to be largely driven by weather and trading relationships and tariff relationships. In the macro, it's still going to be the economic conditions, the growth of the economies of the world, as in the development of those economies, as well as the trading relationships and who the trading partners are. I think the ag and the energy sectors particularly need to be watching the currency exchange rates. I think they need to be watching central bank policy. We've had a period of excessive central bank intervention, I think, where we have overstimulated economies, and that has created a situation now where we're having difficulty managing inflation in many areas around the world. I think that's also taking place within the context of redrawing the lines of relationships between countries, who does trade with who has those relationships. We've saw China and Russia, for example, pairing up in the Black Sea War to support one another, as well as China's concerns about the US and Taiwan. But at the same time now that the Black Sea War may be coming to an end, China is now worried about Russia pairing up with the United States against it. So as countries reshape their relationships of who they do business with, who they want to align with, that all impacts trade relationships, as we've seen all too well over the last couple of years.